Trump's tariffs have had significant repercussions for both the American people and the global economy. Let's break down the adverse effects clearly. First, consider the impact on American consumers. With tariffs imposed on imports, especially from China, everyday products like electronics, clothing, and even household goods have seen price hikes, businesses facing increased costs. Pass these expenses on to consumers, leading to inflation in various sectors. This means that the average American is paying more for the same products they used to buy at lower prices. Now, let's talk about U.S. manufacturers. Companies that rely on imported materials, such as steel and aluminum, faced skyrocketing production costs. Many had to make tough decisions, cutting jobs or relocating operations overseas to escape the financial burden of these tariffs. This has not only affected the companies, but also the workers who depend on these jobs for their livelihoods. Farmers have also been hit hard. Retaliatory tariffs from countries like China, the EU, Canada, and Mexico targeted U.S. agricultural exports, such as soybeans and pork. As a result, farm incomes plummeted, leading to bankruptcies and a staggering $28 billion in federal bailouts to support struggling farmers. This is a clear indication of how interconnected our economy is and how quickly things can spiral when trade policies shift. The job market has taken a hit as well. Studies estimate that nearly 300,000 jobs have been lost due to the disruptions caused by the trade war. Industries like automotive and manufacturing have seen significant layoffs, leaving many families in uncertain situations. On a broader scale, the tariffs have created market uncertainty. Businesses are hesitant to invest or expand due to the unpredictability of trade policies. Many companies that attempted to shift their supply chains out of China found themselves facing higher costs in alternative countries, further complicating their operations. Now, let's shift our focus to the global stage. The U.S. China trade war has led to a slowdown in global trade volumes, which has a ripple effect on economic growth worldwide. Institutions like the IMF and World Bank have warned of reduced GDP growth in multiple countries as a direct consequence of these tariffs. Retaliatory tariffs from other nations have also disrupted international trade. Countries like China have targeted U.S. agricultural and energy exports, while the EU has imposed tariffs on American goods like motorcycles and whiskey. This tit-for-tat approach has only escalated tensions and created a more fragmented global trading environment. Multinational companies have had to restructure their supply chains, leading to inefficiencies and increased costs. While some manufacturing has shifted to countries like Vietnam and India, it hasn't come without its own set of challenges. The uncertainty surrounding trade policies has also led to reduced business confidence worldwide. Companies are delaying expansion plans, fearing further restrictions that could impact their operations. Emerging markets, particularly those reliant on exports, have felt the strain as demand weakens and commodity prices drop. Finally, Trump's tariffs have undermined international trade institutions like the WTO. By bypassing established rules, they've encouraged other countries to adopt more protectionist policies, further complicating global trade dynamics. In summary, while these tariffs were intended to protect American industries, they have largely resulted in higher prices for consumers, job losses, and retaliatory measures that have hurt both the U.S. and its trading partners. The consequences are far-reaching, affecting not just the economy, but the everyday lives of people around the world.